All right, unmute. Hello. Hello, Andy.
Hello, Steve. Hello, Scott. Hey, guys.
All right. And everybody, thanks for the attendance here for the Tuesday regular Trade of the Week webinar. I was just admiring our new title slide here, and I was noticing this guy, his testimonial just paid for the next, at Yackle Dackle. I like that name. I got to look this guy up. I got to find out who Yackle Dackle is. Anyway, thanks for showing up. Right off the bat, we're going to get into the pre-canned lawyer stuff and some other things that we're proud of. But first off, the lawyer stuff. We are a software as a service company. We're going to be showing you some content today, some technology, and maybe a couple of opinions of the host, Andy, and myself, but nothing that we say should be construed as you going out and buying it based on our recommendation. We're not recommending anything. So please don't take anything we say as the holy gospel in terms of financial asset management. You're going to need to go find a RIA or a broker who has taken all the proper tests and will charge you a fee for doing so. All right. Hello, Mike C. Good to see you. Next slide. You're not alone with trade ideas, the community of traders. I'm going to rehash, for a lot of you, you've seen this before, and I see how you guys work. You come in here 5 minutes after the entry because you've heard this before, but it doesn't mean we can't keep harping on it each week because we're very proud of it. We have a very intense 14-year technological platform, Trade Ideas, for scanning the markets in real time and finding opportunities in addition to AI and some other new improvements. But beyond that, we recognize it's not an easy overnight understanding, and the learning curve definitely exists. And so primarily the live trading room here on the right-hand side, this is a screenshot from Barry Anderson's room. He is moderating 500 to 600 people a day at last count. And the best news is this is a free live trading room. There are chat rooms out there that are trying to, get you guys to subscribe, but the feedback we get, this is just as good as any other one of them out there. We've got a handful of good traders who come in here and kind of adopted this format as their own, and out of the graciousness of their heart, they're trading and giving people ideas in real time. But additionally, Barry is moderating the room, keeping a lid on the riffraff, and making sure that people get answers, questions, may get their questions answered if it has to do with Trade Ideas technology. But he's doing all that while trading his own account and moderating a room and helping people. So that's a job I don't want. Actually, Andy and I had that job about 4 or 5 years in a row back 7 years ago. We've been there, done that, and it's not easy. It's taxing. So Barry does a wonderful job of holding down that portion of our onboarding and continuing education. And then beyond that, we have our afternoon webinars, which you are attending right now. You are attending the Trade of the Week. Yesterday, we had office hours with Jamie and myself. I was kind of quiet. I've been under the weather, which I'll just go ahead and say it right now. It's been kind of a taxing day, so I think we're only going to go about 45 minutes today, but let's see if we can pack as much as possible into the 45 minutes that we have here today. Tomorrow, and I'm going to mention this twice, the Q&A demo with Brad and Dan the CEO, and Brad, his right-hand mad scientist. These are the guys that are developing this stuff and dropping it on us. And primarily, we're going to get into that today. The Holly AI channel now has 3 different buckets, 3 different segments. And it begs a lot of questions, so we can answer a couple questions and we can give a couple of ideas. But if somebody has really scratching their head on how am I going to work through this new Holly thing, which I'll demonstrate shortly with the 3 different buckets, what's the best way for me to approach that? Well, I don't have all the answers, and neither does Andy. We're learning as well on how to move this forward. This is cutting edge technology stuff here. But tomorrow, the guys who have been the brains behind it, they're the ones you're going to want to send your specific questions to, like, what's the difference between Holly 2.0 and Holly Neo? So I'll get to that stuff. We'll visualize that in a moment. Trading Studio, Thursday, Andy takes over with Jamie as sidekick. So Monday through Thursday, we have 5 p.m. Eastern webinars, each devoted to some different content and different flavors, especially with different people presenting. Friday, we've got something down here. If I can get rid of that menu, you'll see it says Friday Support Session. So we don't have any major webinars on Fridays, but we do have a 3-hour come one, come all, open to everybody. You're welcome to come in and ask questions. You guys are the ones who determine the content and the direction of where we go. during those 3 hours, and it's a more relaxed environment because we're not trying to push through a lot of content, and you guys drive the content, as I said. Down at the very, very bottom there, that double asterisk, you see TI University. So a lot of you may have remembered that we did one-on-one sessions for new users when they signed up and paid and committed. We gave them a one-on-one session. We are growing too fast, and it's just no longer the highest and best use of really anybody's time to do one-on-ones. And so we have morphed into Trade Ideas University, and the next slide will show some more. But essentially, it's Monday through Thursday. It's always at 12 noon Eastern, and we go till about 1:30 Eastern. So we have 4 of those: Monday, Tuesday, Wednesday, and Thursday. Monday, Tuesday is more basic. Wednesday is more intermediate. Andy's going to take that helm tomorrow. And then Friday is more advanced. And then, of course, at the end of each session, you guys can do questions and answers on things that you're still trying to get help on, and we're very attentive. So let me switch the slides again and a bit more breakdown. Trade Ideas Beginner 101, 201, 301, and 401. So this is always going to be Monday, Tuesday, Wednesday, Thursday, and then each week we start over again with the same content unless there was something that was needing to be added to make these work a little better. This is all self-explanatory as well. You know, these are different levels, but it's a great way, and we've got nothing but great feedback because before, for a one-on-one, you might have had to wait 2 or 3 weeks. And, you know, some people are anxious, like myself. I'd want to delve in and get going. So now, the next Monday coming up is going to be the starting of the new Beginner 101. So every Monday through Thursday, you can loop through those sessions. We also have them all recorded on our Trade Ideas YouTube channel. I'm not going to drop that link in here, but if you can find your way to the YouTube Trade Ideas channel, you'll notice in the playlist upload section, there's one called TI University. And it basically is a recorded event of this content. We did that about a month and a half ago. Not much has changed, so you can just delve right in even quicker without having to wait for the Monday classes. So good deal, great feedback from it. And this next slide will kind of show you, you know, back here we were doing a lot of one-on-ones, but as we got up into these areas and this explosive growth now, as the word is getting out on our technology, we're just not able to offer that anymore. And it's truly not fair to ask somebody to wait 6-7 weeks before they actually get one-on-one help. So that's why we morphed over to the Trade Ideas University. We now have 9 weekly webinars, if you count all of them that I went over. So we are making ourselves very available for people to get a quick head running start and hopefully tackle that learning curve with some of the information that we're giving you guys. So thank you all for adoption of our product. It just gives us further confirmation that we are on the right track here. The theme that I always use for my webinars, because it just made so much sense when Paul Tudor Jones, and I saw his quote where he said, you know, I use machines, but I got to tell you, there's no man that's better than a machine, but there's no machine that's better than a man with a machine or a human. We had to change that. Politically correct. A human being with a machine. A lot of female traders out there. And so what this means basically is our technology is great, but it's not the end-all be-all solution where you can just sit there and, you know, get spoon-fed ideas and expect to become rich. There's still a lot of decisions and discretions that need to be made on the human side. But when we have a machine that's slowly curating and bringing down a list of ideas, instead of just wading our way through the noise and the fire hose of data that's coming at us, well, the machine helps us narrow things down. But when a human being is on monitoring that machine, that's where the real power comes in. And that's what we're trying to preach here. The AI is not a standalone moneymaker. It's a great way to curate ideas, but it's still up to you guys to, one, find your own method of trading, because what works for Ross Cameron and his fast-paced stuff, you know, might not work for some other swing traders like Sean and myself and Andy. So you got to find your own niche and then hone it in, and help our Trade Ideas software help you hone that in. All right, so here we are on our June 5th agenda. We're going to go through a market recap. I have a few interesting things to say on the heels of what I said yesterday, so it might be repeating for some people, but I tried to save some comments for today. We're going to go into the Holly recap, and we'll talk a bit about some of the trades, and we'll talk a little bit about the segments, and I'm going to give you some encouragement as to what's going to be coming soon, hopefully to help encapsulate all that information coming at you. But this is the scaffolding that we have to build to get to where we want to be in the near future, where people can start auto trading and using Holly a lot more non-manually. Manual in fashion. And then we'll get to the trade of the week, which I'm always happy when they work. makes the webinar a lot more enjoyable. So we'll talk about Shake Shack and the genesis of that, how we found it. And there's a lot of technical lines on there that I really like that I'm going to share with you why I like them. And then strategy idea. I'm going to continue on the 1-2 punch of our top lists, but in this case, we're not going to use a top list. We're going to use the 1-2 punch of what today's Holly trades were. We got 3 pools to look at. So we got about 45 charts we're going to look at, and we're going to do a little chart school. And the ones that look interesting, we're going to set price alerts. They might be pullback alerts, they might be breakout alerts. I don't know, but we're going to pass on a lot of them, and we'll stop on a few, and hopefully help illuminate, some people's eyes as to what, you want to look for on a chart and what you want to maybe avoid on a chart. And then hopefully maybe a free chart request at the end. I always like to end on the chart request. It's kind of fun to see what other people are doing and have Andy and I come in and give an opinion, pair a set of eyes on maybe something you didn't see. So hold the chart requests until we ask for them. And again, we'll take 3 or 4 at the end of the session. So the question box is open. You're free to go ahead and use it. If I don't get to it, Andy will type into it. Usually I just try and stay on point. So let's get right into it, which is the typical starting point of our market cap. Hey, something triggered. Not going to bother looking. All right, let's go first to the S&P 500. I've got a lot of lines on here, but guess what? I saved these lines for you guys today because I want to tell you, why I'm going to delete a couple of these lines. I didn't want to delete them and then tell you about them in the past. I want to work through it together. So the market we've had 4 solid months, guys, of wicked volatility back and forth, painting the self into a wedge. We talked an awful lot about the wedge with the 200 moving average coming up and this short-term trend line. We reassess this short-term trend line kind of holding things down from the top end. So a couple things of note here. You've always heard me talk about these horizontal pivot lines. I'll start with this one. This was resistance right here. Resistance right here. Eventually came back and blew through it. Okay, then it blew through it and then it pulled back and resistance became support. Look at this 2-week sideways action with that orange line that was resistance back here, but right here, it's support all day long, 7-8 days of testing it. We had one little hiccup down day, which actually was my webinar day last week, and I said, well, I don't like that, but I'm not going to get concerned about it. It just dropped back into no man's land, but here's a real takeaway I want to show you guys. Resistance becomes support on horizontal pivot lines. Well, guess what? The same thing can happen with trend lines. All right, so here's our downside trend line. Here's the day right here that we broke through. All right, popped through, 2 days closed above, fell right back down, and look at this wick right there. Touched that downside trend line and popped right back up. Remember, guys, it's the close. It's not the intraday traction, it's the close, because more often than not, we see these end of day buyers come in and these wicks show up on the downside as the price gets pushed back up. So that was a good test. And then we had another test. We've had 2 tests of this downward trending line in the SPY. Both times, nice end of day buying, wicking off that level, and now we finally pushed higher. The second time was the charm of the test of that downside. So that is now begging me to highlight this and once and for all get rid of it. It's no longer in play as far as I'm concerned. Additionally, what's no longer in play is probably this deep-seated orange support pivot line. I'm going to go ahead and get rid of that one too. I'm going to keep this one in here because it was still the most recent example of resistance becoming support. And then just above that is the high end of that range. And that's where we did our damage yesterday and today. And this is where, you guys have heard me throw up the caution flag a few times and then maybe even use the bearish word here and there. Well, it's hard not to when you have giant down volume days, only to have light volume up days back with giant volume days down. But we never really resolved anything. We pounded on this 200-day moving average numerous times, and the price kept getting kicked back higher. So I guess where I want to go here next is one of the most positive virtues you can have as a trader is the ability to not get married to a notion, married to a trade, married to an idea or a method, because you know it's going to work even though it really hasn't. You have to look at the footprints in the sand here and let them determine when it's time to turn the bearish cap back around into the bullish cap. That's pretty much what I'm trying to tell you guys here. All right, and I'm priding myself a little bit on being very open-minded. It's very hard for some people to turn on the dime where they've been bearish, 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 and they start reading articles about central banks and trade deficits and politics, and oh my God, well, forget all that. All that we care about is what the footprints in the sand are telling us. And after yesterday and today, in my opinion, they have pretty much told me that the bearish hat should be put back away for a little while, because we are busting back out of this nice little base camp that was built after pounding on that downtrend line. Looks pretty good. The other thing I want to highlight with you guys here is we have a doji in the spiders today. We also have a doji in the Dow, meaning the price opened, threw some elbows to the upside, threw some elbows to the downside, and when all was said and done at the end of the day, we closed right back where we started in the Dow. That's what you call a doji. There's no color in that candle. It looks like a perfect cross. Sometimes it'll be longer on one end or the other, but the point is there's no color. There's no red or green in there, which says today was a stalemate. All right, stalemate. That's what doji means. No winners. Let's go on to the Qs. And speaking of turning your hat around and having an open mind, I took off what I had as possible head and shoulders a few days ago, because this last 5 days of action, if you're not paying attention to that, you're being stubborn. And I hate to do this, but maybe there's an attorney or two out there that's trying to learn. I just want to let you attorneys know you guys are facing a little harder headwinds than other newer traders. Why? Because you've spent so much time in school and your professors and your law exams and your law projects to take a side and argue that side to the death. Don't give any credence or open-mindedness to the other side. That's not a virtue that's going to help you in this business, and that's what I'm trying to say here. You have to be able to flip your hat quickly and throw away your biases about what you think about the president or politics or trade deficits or anything else. The footprints in the sand are telling the story. So no longer am I even going to consider a head and shoulder and all this volatility that we had. Why? Because we moved right out of this range and made another new high out of a base camp. And I'll tell you, we were just a few ticks away. Let's just take a look at the numbers here. 71.27, 71.7. So we were 20 cents away today from breaking out to new all-time highs in the Qs. If you're bearish on that, you want to rethink your methodology. So again, what I was saying and harping on last night, you've got to be able to swivel quickly from short to long, long to short. You can't get dogmatic and you can't get stubborn in this business. That is where you're going to start to run into trouble and start to blow up your account. You're not smarter than the market. The market is smart. The market knows it is what it is, and we can argue all day long of why it shouldn't be going up. Those are the people that are not making money. They're fighting it and they're losing money and they're missing opportunity costs. So this chart, take my bearish hat and throw it as far away across the room as I can, all right? NASDAQ. And let's end up here with something interesting, IWM. Let's get rid of this down here. I don't think we need that anymore. We could probably get rid of this too. And we'll keep these two ranges. Look, resistance, resistance, broke through, and tested support. So if you haven't seen enough examples that I've been giving you on prior resistance becoming current support, and that's the definition of a pivot line, I try and give them wherever I can. Here's one right here, so I'm going to leave this guy in. But what are we noticing about the IWM, which is the Russell 2000, which is an index of small cap stocks? Well, a lot of times, there become times in bull market periods where the small cap stocks take off and try and lead the market higher, and that's what we have going here. IWM, all-time high today. Q's got close, Spider's getting there, but the Russell 2000, the small cap guys, they're giving us a clue here. This is where the market leadership is, all-time highs as an aggregate. With that one thought in mind, before I forget, okay, perfect, little big guy, all right, we got this guy. And there's another one called Mighty Mouse, all right? Those are two AI strategies that focus on stocks either under $5 or under $10. If I were you guys, I would be paying close attention to the little big guy and what was the other one? Mighty Mouse. If you see those things start firing trades, we have a little extra confidence this time in that the IWM Russell is breaking out to all-time highs. And so trust me, more people are seeing this than you realize. And so small cap stocks might be the order of the day this week. Let's see, but this is the only thing we have to go on here, giving us that possible scenario. Let's see, what else did I want to talk about? I mean, I think my main points today were you got to know when to hold them and know when to fold them. And folding them means getting rid of your short bias and accepting what you're seeing in front of you. The footprints in the sand, the herd is moving on without you. And you can fight it, but it's not going to end well. Let's see, what else did I want to talk about? Oh, yes, Andy brought this up to me. Earlier this morning, we were starting to get some more weakness. We need to watch this. This is just kind of a side note. Italy, the EWI Italy ETF was starting to roll over again. Look, the 10-period moving average coming down, catching a dead cat bounce, and now forcing the price lower. If we continue to see that, and maybe Credit Suisse, a European bank, want to go low and take out last week's low, maybe Deutsche Bank, take out. These are the catalysts, guys, that the market is focusing right now. Market's always focusing on something. Everybody always wants to know, well, why did the market do what it did today? And usually people can come up with some decent answers, and they might be right, they might not be, who knows. But we just want to follow the footprints in the sand, and Europe is not out of the woods yet. Even Brazil, IEWZ, having a rough day today, trying to take out last week's low. We might be hearing about Brazil tomorrow. So just so you know, all the cool kids at the A table right now, that's what they're talking about, the institutions. They're watching the credit default swaps, the interest rates and the junk bonds over in Europe and how they are faring, because believe me, guys, it can translate over here in contagion. We had a summer about 5 or 6 years ago where Europe was having a rough go of it, and it just pounded our markets with a lot of volatility. It wasn't fun. Andy and I were trading a mirrored managed account at that time, and I remember a lot of anxiety. I think I had my wastebasket close to my desk that day. Just gonna leave it at that. So that's what I've got so far for the market commentary. Anything I'm missing here, Andy, you want to talk about?
I'm still bearish.
Andy's still bearish. He's got too many fundamentals in the back of his mind.
No, I definitely got my eye on, what's happening over in Italy and some of these, especially the banks. That's the key to watch. I mean, these other, smaller economies can fall apart and not have a huge effect, on the overall world economy. But when you start seeing some of the big banks really take a hitting, beating and getting down to where they were back during financial crisis lows, you gotta pay attention to that. No, I can't argue with IWM. I still stick with the idea that that's usually not. Yeah, well, the IWM is usually not the sector, the indice that kind of leads the charge. Now, granted, the Qs are doing it as well. Really, I mean, Qs are not what they used to be, and the reason I say that is you have 5 or 6 stocks that make up almost 50% of the Qs. So it's almost kind of like a Dow thing. You got 30 stocks from running the Dow. But when I see how far the spiders and the diamonds, let's see if they drag those up. But of course, you have a lot of financials in the spiders and the diamonds, so that would cause that to do.
And they are lagging.
They are lagging. They are very much.
They are
lagging.
Right there, guys. This is the
nowhere
financials.
near there.
Here's the banks. KBE. They're also kind of lagging. Back here are the highs.
So I'm Steve's right. I mean, when the price action, and I even said this the last couple of weeks, we're above the moving averages now. Things are looking better, but I am definitely cautious, about this is not what I'm accustomed to looking at over the last 20 years when I'm looking at, a kind of a really very strong bull market. But
such a tale of two tapes back here. Price declining, moving averages rolling over, the 10 period slamming the price down below all 3 moving averages. Then they just start slowly working their way through, and now they're through, and now the moving averages are fanned out again perfectly. The 10 above the 20, the 20 above the 50. I just think if you're just full on bearish, I know Andy has a hint of bearishness for other reasons, but if you're just going to be a full on bear and disregard what you're seeing here, well, then you're missing the bigger picture, and you're going to be behind the 8 ball.
Absolutely not. Yeah, you cannot sit you can't sit short in this kind of stuff. No way. You got, but at the same time, I would be very cautious just being all loaded up to the long side. But that's just my.
All right. So I was just going to move forward onto Holly, and I'm going to do my 30,000 foot view again here. Okay, I'm going to start off by saying The day did not finish out that great, and we'll take a look at all three segments. However, Monday, Friday, and Thursday last week, all three segments of Holly were just killing it in the risk on category. Let's think about that for a second. Here's those days back here. Markets breaking out. Risk on means what? Hang on for the whole day. Look at these long green candles. Holding all day was kind of the order of the business. Well, then our market backdrop, which controls everything, guys, the market backdrop is paramount to everything. We get a doji. We get a a no winner, just a lot of elbows thrown, stalemate in the Qs. We get a lot of elbows thrown, no winner, a stalemate in the spiders, okay? So this is kind of telling us that this last little move might be getting a little tired here. We could go sideways, which would be ideal for a day or two, and move higher again. We could even pull back from here. We could even break out from here. I don't know, but a lot of times when you see a doji like this, the following day you want to pay attention to, is the price taking out the high of today's doji, or is it taking out the low of today's doji? Because we call it like a day of rest. You know, the day of rest is kind of like, okay, let's just see what happens and see where we go from here, and it's kind of a benchmarker. So the reason I'm bringing up these dojis again, and also in the Dow, another doji. So this is dojis across the board, guys, a complete stalemate of no winners, no losers. I'm going to get rid of this downtrending thing while I'm thinking of it too. We don't need that anymore, and we probably don't need that at the moment. So with that segue in mind, taking that into Holly today, we had kind of a mixed bag. It was definitely a risk off type of day for the most part. The markets, they went positive, they went negative, they went back to positive, and kind of stayed around there. So those are choppy days. And typically, we're not going to have a nice, smooth bell curve histogram of profits on the AI. What else was I going to talk about? I think that was a major, I wanted to just set the stage for what we talk about today. The fact that, these days are going to happen. They're just kind of no harm, no foul days, no direction, no winner, no loser. It's just kind of a day of rest, a day of wait and see. And let's see if we take out the high or the low of that doji. If we take out the low of that doji, we may be in for a pullback for a day or two. Maybe we go sideways. But if we take out that high, then in hindsight, this turned out to be a day of rest, and then go again. So that being said, let's jump into Holly. So the first thing that is new and unusual is if you right-click in the main strategy and go down to the bottom, you see a submenu called Segments. Holy Grail has been the same pool of AI strategy trades that we've had from day one, 2.5 years ago. If we right click here and notice risk on was down 20 cents, risk off the same. These histograms are really, what I'm trying to say is these histogram performances today are really mirroring the dojis that we had across the board in the market. Because again, the backdrop of the market is going to be the driver of the action. We're puking down 3% on all indices, you're probably not looking to buy stuff. So it all predicates on what's happening in the general market. And I feel like today the story is on all three segments we had a lot of chop. Just looking visually here at the histogram. Let's go to the next one. Holly 2.0. Different strategies. Now you may see the same strategy, Sunrise Mover, and this one may have had a 66.1 win percentage last night. But if Sunrise Mover shows up in another Holly segment, that win percentage might be 60 or 62 or different, because what's happening is the AI is giving two versions of a same strategy. One just has different filtering than the other one has different filtering than the other, but they both have solid scores, so they're making the cut, and they will be spitting out usually a different symbols from what I can tell so far. That may change in the future. So there was another crazy back and forth histogram on the Holly number 2. Let's go to Holly segment, Holly Neo. This one seems to be, and I'll touch on this in a second, but this one seems to be, from my observation, a bit more squirrely. Seems to have a bit more loosey-goosey risk parameters, a bit more volatility, but I'm going to save those definitions for when I know more and when Dan and Brad talk to you tomorrow. Ideally, let's go back to this, okay? So segment, going back and forth, it's not exactly the desirable user interface that we want, because we've got what was that? Now it's gone, and what's this? And so what's going to happen, guys, I believe, and I highly recommend for people who want more insight on these new Holly segments, what's the best way to use them and where are we going from here? please attend tomorrow's Q&A webinar with Dan and Brad. Again, those are the mad scientists, and they will have a much better idea and be able to communicate the vision that they have. One vision might be something like a simple new window that's a dashboard, and there's 3 pie charts in that dashboard, and will be a lot of data points we can glean from that dashboard without having to slip back and forth. Maybe we see that all 3 Holly strategies have nothing but shorts going. Well, that's a huge indicator that most people wouldn't have. The AI, the non-emotional statistical probable tool, is saying there's no reason to go long right now based on my machine learning and what works and what doesn't. You might want to heed an example of that in terms of short bias. And so hopefully a new dashboard will be coming soon, and I'll try and, Andy and I will weigh in and try and help them design and remind them of what traders are going to want to see and what some of the ideas that we could glean from that dashboard looking at all 3 pools in a graphical formation rather than having to go through one by one. But for now, we have to go through one by one. And guess what? A little later in the session, we're going to go through pretty much all of Holly's trades today, and we're going to do an example of chart school. I'm going to say pass, I'm going to say I like. Andy might jump in and say he likes something, and we'll stop and we'll talk about that chart. So maybe we'll get a little bit more chart education going today for people who could use some more of that orientation of how to look at a chart and figure out what it is saying. But before we move on, we will come back to Holly and look at the trades. Did you have anything you wanted to add on this section?
No, you were exactly right, and that's why you saw a combination of longs and shorts. And when you have
Yes.
a market like this, where you gap up and then you go to lows and you fight back, it's going to trigger both sides. And you just have to be careful with Holly. You have to be more selective in your. I mean, there's a couple, and I'll wait for us when we go through them where I can show you ones today that were kind of no-brainers, but. There's no sense in going into it now, but I just want to throw that out. Yeah, it makes a tough day for any type of trading when you have this kind of slop.
What I just did here with Holly 1 segment, I took all the trades and sorted them by time. So this was the first one. Notice we got 1, 2, 3, 4, 5 longs. All right, let's go to our spiders for the day. And here's the open. 1, 2, 3, 4. Here's an hour's worth of candles right there going up. Well, the AI was trying to piggyback that. Then we had this nastiness in the middle of the day. Well, the AI said, whoa, might need to change gears a little bit here. And then towards the end of the day, buying it back. So just looking at the long, short, long string, you can almost see how it followed perfectly what the general market was doing. Kind of interesting. But nonetheless, it's not a broad-based rally. It's not a broad-based sell-off. We get a histogram of greens and reds and greens and reds. And it was just kind of a no-event day. But I get kind of excited on doji days because the following day can typically give us a tip-off of what the possible direction might be for the next few days coming forward. All right, so we'll come back to that because we're going to approach it a little differently today. I think I need to go to the trade of the week. Shaq. All right, trade of the week. Checking in on last week's trade of the week, we have Microsoft at all-time highs today. No complaints in Microsoft. Did exactly what we hoped it would do. This week, knowing that we knew the market was getting close to going back to possible all-time highs, the focus came back to let's try. We did a breakout with Microsoft. Let's try something a little different this week. Same thing, at least a 52-week high. But a lot of you know that I have that one particular scan that I like a lot. That's called Squeeze Me, and Squeeze Me is a top list that only shows me stocks that are near a 52-week high, that are close to breaking up, but have giant short float. Look at this fossil, just a massive short squeeze higher. And here's our friend Shaq, still making waves. Close to a new 52-week high. It made one today at the close. Giant short float. I want to talk a quick second on the short float here. Trade Ideas has it at 57%. I've seen it on some other sites, maybe a little bit less. I just want to let you guys know that this particular data point it's not cut and dry. It's only reported twice a month, and I believe we pull our data from Yahoo Finance. So if you're going to get into a trade and you're going to really use the short float percentage as a major component of your strategy, it might not be a bad idea to go in and do a Google search and say short interest for Shaq, And then NASDAQ has a site, Guru Pro has a site, and Short. And there's 3 or 4 sites, and you can go in and kind of see, one site might say 40%, one site might be say 47%. So it's not a cut and dry figure, but if you really want to get a handle on it, you could maybe take an average of some of the data points you see out there. But this short float only updates twice a month, and it's a really interesting data point because it's not always perfectly lined up at different websites. So we do the best we can to try and get you that. But what I'm saying is, if you ever want to double check that value, go and do a Google search and see what some of the other sites may have for it, including FinViz or Guru Focus and things like that. So Shake Shack was found on the Squeeze Me. And the idea was, look, if this market's going to go to highs, let's try and play off of the misfortune of short sellers. All right. Now, short sellers are only making money when the price is down from where they got in. And if we look at this chart here, can anybody honestly tell me that there's short sellers that are in the money and happy right now?
Mm-hmm.
Probably not. Okay, I don't think there's a single short seller making money, especially at the new 52-week high today. So this is doing exactly what we want. Let me focus on a few things I really liked. All right, earnings were behind us. We had a nice gap. But that doesn't always mean anything. Gaps can go 2 ways. They can come back and be filled. A lot of times they can, but other times they might not. They'll dig in, make a higher base camp, and then shoot higher. And when that happens, well, then we can start to talk about the other scenario of a gap we call breakaway gap. Those are very, very bullish, especially when you have a high contingency of short sellers that are not in the money. The only way they can get out and stop their pain of losing is to buy the stock back. And to buy the stock back, guess what? They're competing with other people who want to buy stock to go long. There are institutions who do nothing but buy new 52-week highs. And so it's like yelling fire in a crowded theater. You want to be one of the first people to get out. If you're in a position like this, riding a short at a 52-week high, and you know that 50% at least are also short, do you want to be that last guy to not be able to get through the fire exit? No, you probably better get out and ask questions first. So ideally, we start to get moves like Fossil. Now, I'm honestly going to tell you guys, this is nothing more than a short squeeze. Nice breakout back here from this range, and day after day after day, the short sellers are slowly capitulating and covering, and it's driving the price higher. That's why I like to squeeze me swing trade, and I like to do it at the 52-week high because nobody's in the money there, and you're more likely to trigger everybody's fear mechanism and get them to panic and cover out. So these can be great day trades. They can be great 2 or 3 day swing trades. But all the idea is to just make sure, the top list work really well with finding a great place to put a price alert. And I'm looking for a good example. Looks like most of these have been trending. But when I find something like this back here in TNDM, you can see it was kind of going sideways, 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 and then it broke above, and it's been not looking back since. So I like the sideways action, looking for a crack in the ceiling. That's where I'll come in and set my price alert. So the genesis of Shake Shack being trade of the week was looking for continuation in the market that we felt we would get and finding a high short float to exploit and see if we can get people to drive the price higher. And while we're positioned long, we can make a good trade out of that. Technically, a couple other things I really like here, aside from the gap not coming back and being filled, we had a Holly buy tag back here. So Holly saw something intraday with a volume spike, and the swing stop was down here. So it really never pulled back too far, popped back up, but then look at what happened. It's the old prior resistance, future support, guys. There's our resistance, big green candle breaking through, and the very next day coming back, and the day after that, resting right on the pivot line. 2 days of pullback, a nice little triangle there. When we see that, this little low range spinning top here, that's our signal candle. Just like I said to you, when you see a doji like that, if the price takes out the following day the high of that doji, chances are there's continuation. If it takes out the low of that doji, chances are they continue. So it did everything we hoped for. The trigger was at the high end of that doji on Friday, and we've had 2 nice solid green days. And let me just add to this. You guys know I love to do these screenshots. This was Monday. This was the stock triggering on the open and then coming back and holding support from the day prior. But then it starts to move higher on top of my 10-period moving average. Look at the volume coming in here towards the close. And then as it's getting up to brand new highs, my 5-minute volume's at 650, my 1-minute volume's at almost 400%. That's what we want to see for confidence to stay in the trade and keep our finger off the sell button. That was just one. We had another one, I believe it was today. And today we went to new highs. We took out that high from yesterday. And first thing I do, confirmation on my single stock window, 5-minute volume at 320, 1-minute volume at almost 500%. That's good in my book. That gives me confidence that buyers are in there pushing it higher. Chances are a lot of those are the short sellers trying to get out. And then as we got to the close today, it was very hard to get it back above that green line, but right at the close of the day, we popped through with a green candle. I screenshot it. Again, great values on the 5-minute volume and the 1-minute volume. So I kind of like to screenshot those to really highlight what's happening in the moment as stocks are making new highs. If you see those stocks making new highs with great volume, but then all of a sudden a big wick comes in, and then you get a red candle, and then you start getting values on the 5-minute at 500% and the 1-minute at 800% with a red candle, well, that's a red flag. You got to be careful. We don't want to see heavy volumes on the downside. We want to see heavy 5-minute and 1-minute volumes on the upside. So feeling good about the two open Microsoft and Shake Shack. Microsoft all-time highs, Shake Shack at 52-week highs. And I'll tell you what, people, everybody that's short this thing, they're going to go home today and they're going to see, oh boy, I was really hoping this red candle might have been a fake out and we could bleed back down into the range and get some relief from the pain of losing money. Nope, you're going the opposite direction. The vice is tightening on your head, you short sellers. I think tomorrow is going to be a pretty good day. I would hope so. And then lastly, look at how the price action was just resting on the 20 and the 10 period. It wanted no part of getting below these two moving averages in the last 5 days. So all those things together pretty much was a no-brainer for the trade of the week this week to go for another short squeeze exploitation. And I just want to show you guys, when I use my price alerts, I set a lot of notes. Well, here's the ones that are working up here in green. Squeeze, squeeze, trade of the week, short squeeze, short squeeze. So I focus on that method a lot. And the feedback that I get from my price alerts is that, that's working. So got to go with what's working. All right, so that was the genesis of the trade of the week. I'm just looking, the volume is picking up nicely. Yeah, hopefully we can do another one of those next week. Question, what are the settings? Yeah, I'll show you the settings, Vic. And let's start with Vic first. So the settings on here, and then we're going to start looking through some Holly trades pretty quickly. It's nothing more than two major filters. The first one is the short float filter set at 25%. Okay, short float 25% or higher. Here's the second one, position in year range. 52-week low equals 0, 52-week high equals 100. Well, we crank this up to minimum 95th percentile, give us the stock with a little bit of head start that might try and assault 100, which would be the 52-week high. So it's an early warning, and we're clipping everything else that's underneath the 95th percentile. If I didn't have that in there, I would have way too many things to choose from. So it's as simple as that, really. Volume 300,000 shares a day, price to 5 to 200, and that's the basics behind that. Now you can find that Squeeze Me on channel 4. Channel 4 is the 4 guys that do a lot of these scans. I'm not going to go into it, but there's a lot of small windows in there. If you can find Squeeze Me in there, you can just right click and save it to your cloud and have an exact copy of it. All right, yeah, the 1-minute volume, exactly. If you don't have it, you're going to have it dropped into your account, and we're happy to do that. It just takes us a minute on our end. Send an email to info@trade-ideas.com. Tell us what your username is, and you'd like to have the 1-minute filter dropped in. So therefore, you could go in and right-click and go to Configure and find 1-minute volume. Oops, 1-minute volume. And as you can see, where is my 1-minute volume? U21 signifies that's in shares, and then U0 signifies 1-minute volume in percents. These are custom formulas, so we'll have to drop those into your account for somebody who's going to want that. So can't do it now, but if you email info@trade-ideas to add the 1-minute volume percent to your account, any one of us can do that quickly. All right, what I want to do to finish up here, I don't think we're going to have time for chart requests because we've got a lot of charts to look through. What I want to do is just kind of quickly go through the different segments of Holly, starting with the first one, And here's our trades today, and I'm going to open up our daily candle a little better. And let's see if we can find some things we want to mark up using the price alerts. So tomorrow or the next day or the next day, if it goes through, we're not going to miss it. All right, we do the same thing with top lists, but at the end of the day, these Holly trades can be very much considered the same as, kind of a top list. So let's see what we got. I'm going to start with IBKR. All right, interesting, a beautiful 6 or 7 day downfall with a nice tail yesterday, and then today it's trying to kind of build on it. I might actually be interested. Again, there's a doji, and if the price gets back above that doji, I'm going to want to know about it. So I'm going to select a price alert on that for a possible 2 day bounce, maybe. Not much. What's the next one here? PCRX. This one had a lot of volume today, but it's not really going anywhere. It's right smack in the middle of a range, so I don't really see much there. It's been in a downtrend. I'm just going to leave that one alone. JELD, pretty good downtrend. Oops, not interested in a big downtrend. Aqua, downtrend, but might be reversing. You never know, but I'm still not seeing enough there. There's many more things we could find that look better. Run DMC. Okay, now we're getting into something interesting here. This thing's getting a bit extended. 1, 2, 3, 4, 5, 6, 7 candles. I can tell you right now, guys, if you're the guy that, and again, this is a buy tag for the intraday, but if you're a guy that wants to wait for 6 green candles and then jump in and establish your position, you're just asking for a pullback. So what I would do on something like this might be look at this prior resistance that it broke out of, maybe make a markup like that, and if we get a pullback, it might catch these moving averages. I wouldn't buy a breakout here. I'd look for some sort of a pullback, but nice uptrend, and it makes sense using a pivot level to monitor the price if it does come back to that level. Zoom Z, well, this is interesting. A nice candle today breaking out of a big range, and we'll go back here and mark that up. Not a bad looking chart. There could be some follow through on this one. Could be worth maybe putting in a price level at the highs to see if it breaks out of that. PGN. Not really, nah, that chart's not really doing much for me there. And as we get down to the bottom, nope, that's a giant gap down. Dead cat bounce and a downtrend. Interesting. 3 days of hard volume. Gapped up in a red candle means we kind of sold off. A lot of volatility in this one lately. I don't know if I would really have a waypoint that I would watch.
That's a tough one.
If we go back here, these lines, there could be something to be said for some support resistance levels there. But other than that, I don't know. Okay, Fossil. Didn't we already do Fossil?
We talked about it. We didn't mark it up, though.
Yeah, so Fossil, we got a breakaway gap up here. Looking back. Oops. Looking back. Oof. We really got ahead of ourselves. So this one's gone pretty parabolic. I would not be a buyer up here at these levels, but where might this want to settle back into? I'd say I'd start with that gap.
Yep.
Just look at that gap fill, and if the gap fill happens to coincide with this moving average coming up and being right there at the same time, that could be an interesting entry.
Mm-hmm. You gotta be careful with the short squeezes though sometimes, because usually once they've had their move and they do roll back over, they can totally reverse on you and never look back. So just be careful.
Yeah, good point. I forgot we saw that on the short squeeze. All right, well here's another one following the 10-period moving average for the last 2 weeks and then pushed it higher today. That looks like that's really breaking out up there.
Yeah,
getting close, but it's been pretty extended. You could take, if you wanted to try and buy that high candle, you better keep it pretty tight. And by that I mean, you probably don't want to see it come back down below those breakout levels. That would be the pivot level. All right, so idea what I'm doing here, guys, is just trying to talk out loud and do some chart looking. That's what we do all the time, but let people kind of see why we like something or why we don't like something. So here's Holly number 2.0. Let's see what's going on here. So a big day breakout for NX, probably had news or had earnings is what it had. Big candle, I don't know what to do with that, quite honestly. I'd rather look for small consolidation setups. Very noisy candle. And notice, guys, notice all the wicks on the top end and bottom end. These are like porcupine charts. I typically don't like those because they just make a lot of noise midday and then settle up in the middle. Okay, now this is kind of interesting. We had a nice push higher and then 2 days of pullback with a nice bottoming candle, and now a green candle moving up higher out of there. Good trend. Could be one to watch for a consolidate or a continuation move through there, but I wouldn't give it too much wiggle room to the downside because we had a nice green candle today. Cerner, oh, this is interesting. Okay, so this is kind of what I was looking for, guys. You know, we have a nice narrow range back and forth candle. This thing just started to pop out with a little green candle today, but it's got a little work to do. So what I'm going to do is I'm going to set an actual price alert at the top end of that. I found it on Holly 2.0, and that blue line is going to go right across this wick back here. If we get a nice move tomorrow, it looks like we touched it today on the intraday. If we get a push through that move tomorrow, I like this one a lot, okay? I don't see any earnings coming up, solid fundamentals, nice tight range. Anytime you can come out of a tight range, and the longer and the tighter the range, the more pent-up potential energy could come out of there. Okay, yeah, great question again, Pedro. What's the difference on all the new Hollies? I don't have a great answer for you because this has just been about 5 days and it was just dropped on us. Going forward, we're going to have a lot more ability to help focus your eyes and mind on how to use this thing better. There's definitely room for improvement, and like I said, I do believe a nice dashboard will be coming soon. But if I were you, Pedro, and you want more information on specifics, please attend the Q&A webinar tomorrow so the guys that are building this thing, you can hear it straight from the horse's mouth. All right, we'll do a few more here. JCI trying to do a, well, you know, this looks like the lower end of the range down here. JCI, big downtrend, but, you know, it's looking like it may want to bounce. Nothing really to write home about, quite honestly. Zoom Z, I think we talked about that one earlier, and we marked that one up. It's just a different trade, a different setup, or different configuration, I should say. Another downtrend with a dead cat bounce. Not interested in that. Well, this is interesting. This is quite the trend. You usually don't see that. Only 6% short, so that's not a short squeeze. Star Surgical, yeah.
Just a grind, melt up higher.
Just a grind. You don't see a whole lot of those, but I'll tell you what, guys. If this thing happens to have a horrible down day and comes all the way back down to the swing stop, hey, might be worth it. Swing stop entry is what I'm going to call it. I wouldn't take a chance anywhere up here, but if it has a horrible day where you can knock out 20 days of green candles with one bad red day candle, this is where we had congestion before, so maybe that might warrant a pullback at some point, but no guarantees. Still moving higher, but this would have been more interesting coming out of here. This is the one I marked up a minute ago where it said tight range. Look at what happened out of that tight range, okay? That's why I marked up that last one that I liked. Which one was it? Do you remember?
It was the same one. I don't know. I saw run. You did earlier.
This one.
Yeah.
CERN. So it's a different one. I was saying, guys, that nice tight wedge might have some more to come out of it tomorrow. And then in run back here, it did exactly what I would hope the other one would do. So nice move out of some congestion there. Eesh, that's an outside day if you've ever seen one. Took out the downside on a gap down and then came right back up. Earnings, yeah, it was coming off of earnings. So the original earnings expectation and reaction was gap down, but the people in the know and the bulls bought it right back. That's a giant candle. I don't really know what to do much with that. Let's do a few more here. We've seen that one already. Horrible gap down. Messy in the range. You could consider this consolidation, kind of a cup and handle. You know, maybe if we got above this this level right back here, that could be something to consider. A move higher out of that level. Not seeing much there. Pretty big downtrend. I see a reversal wick on this one, just wanting to fall back into the range. Okay, here's another one of those tight ranges that are going back and forth, although it is in kind of a downtrend. It's not to say that if it doesn't get back above this nice, long, tight, narrow range, I'll just mark that one up. That could be interesting. And we'll finish up with this one right here. We'll skip Holly Neo for today. 2 big giant days. I don't know if now is the time to come in and start trying to go long here, but if we could look back in time, we don't see anything other really than this shelf way back down here, and I don't know if it's going to come back that far. So train may have left the station on that one. But what I was doing here for the last few minutes, guys, was just going through chart by chart, thinking out loud, trying to find the ones that I like and giving you a reason for why I like it, and then marking them up, setting it and forgetting it with price alerts, and just moving on about your business. If one of them does happen to pop up in real time, well, you've got some decisions to make. What's the volume? What's the market doing? What's the sector doing? What's the relative volume? And then, start defining what your risk parameters would be on something like that. So now that we have a lot more Holly picks throughout the day, there's more of this to look at. And trust me, when we do the trade of the week, guys, this is the first place I start. And so now we've got a lot more things to look at as before I move on to some of the other scans when we do the trade of the week. So that's about it for all I have today. And again, Pedro, I highly recommend anybody else that wants more color on the 3 segments of Holly and how best to use it. What is the difference between Neo versus Holly 2.0? Is one more volatile? Is one more conservative? I don't have those answers for you yet, guys, but we're going to have them soon. But tomorrow's Q&A answer is a great place, I think, to go and get that information. All right, thanks for the comments. That's all I've got for today. So we did the full hour, it looks like. I'm going to go ahead and bring the slide deck back up, put it in present mode, and let Scott come in and walk us out.
Yeah, thanks, Steve. Thanks, Andy. So there's a podcast, and you all should be subscribed to it. Just search for Trade Ideas Podcast in your favorite app. Click on subscribe and get the newest episodes. Last week, Brad Williams was on. He's Trade Ideas COO and very much in charge of product management. And the week before, we had David Mabe on, who is one of our lead engineers and pretty much the guy behind our backtesting module, the odds maker, and Holly, and the new instances. So you should check those out for an understanding of what's going on behind our development. We also have a code. Oh, we got an ebook that Andy and Steve both participated in. You should make sure you got that. Trade-ideas.com/ebook. It gives you 5 strategies to have in your trader's toolbox for when the market is no longer in a bull run, and we are there now, so make sure you got it. There's a code, summertime is good this month, all caps, and it takes 15% off your first month or year of any Trade Ideas subscription. Those of you that are already subscribers on Standard and want to upgrade, you can also use this in your upgrade. Just log into your account at TradeIdeas.com, click in the upper right on login, log into your thing there, and then click on Change My Subscription, use the code. Thank you, Andy. Thank you, Steve. Any questions, send it to info@trade-ideas.com. You can follow Steve at TodayTrader on Twitter. Also follow at Trade Ideas, and we've got some other handles like QuantBot, Trade Ideas 1, so check those out. Facebook.com/TradeIdeasPro is the profile on Facebook to like, so you can share everything we post with all your friends. It makes us happy, and it makes you feel good. Thank you. We'll have a recording of this up later on tonight or tomorrow morning, and you'll get an email reminder about how to watch it. Thanks, everyone.
All right.